Don't buy gold today. Seriously, hold that thought. What I am about to tell you might just save you from making a huge mistake in the precious metals market. We're talking about February 7th, a day that U.S. looking more and more like a major turning point for both gold and silver. I've been digging deep, and there's a secret brewing that the mainstream isn't talking about. Stick with me, because we're going to expose what's really happening behind the scenes. First off, let's talk about the big picture. Last week was absolutely wild, wasn't it? The Federal Reserve came out with their statements, and it sent shockwaves through the market. Jerome Powell basically signaled that rate cuts, which everyone was hoping for in March, are probably off the table. He was pretty clear. They need more confidence that inflation is truly heading down to their 2% target. What does this mean for gold? Well, higher for longer interest rates are typically a headwind for gold. Gold doesn't pay you any interest, so when you can get a good return from bonds, the appeal of gold can dim a little. We saw gold take a hit right after that news, dropping below that key $2,050 level. But here's where things get interesting. Despite the hawkish tone from the Fed, gold didn't completely collapse. It found its footing. Why? Because the market is starting to look past the short-term noise. Think about it. The economic data is all over the place. We had a blockbuster jobs report that blew all expectations out of the water. On the surface, that looks like a super strong economy, which again supports the Fed's decision to hold rates high. But if you peel back the layers of that report, you see some inconsistencies. A lot of those jobs were part-time, and there were significant revisions to previous months. It paints a more complex picture than just a headline number. This is the secret that many are missing. The market is a battlefield of conflicting signals right now. On one hand, you have the Fed saying no cuts yet. On the other hand, you have underlying economic weaknesses and massive geopolitical tensions simmering around the globe. From the Middle East to Eastern Europe, the world feels like a powder keg. And in times of uncertainty, where do smart investors turn? That's right, gold and silver. They are the ultimate safe haven assets. This tug of war is creating a fascinating setup, especially for silver. Let's zoom in on silver because I think it's the real story right now. Silver has been the underdog, the forgotten metal. While gold was flirting with all-time highs, silver was lagging behind, stuck in a range. The gold to silver ratio, which tells us how many ounces of silver it takes to buy 1 ounce of gold, has been stubbornly high, hovering around 90. Historically, when this ratio is so stretched, it's a screaming signal that silver is undervalued compared to gold. And now we're seeing signs of life. Silver has been showing incredible resilience. Even with the strong dollar and the Fed's stance, silver has been defending its support levels like a champ. Industrial demand for silver is set to hit record highs this year. Think about it. Solar panels, electric vehicles, 5G technology, they all need silver. So you have this dual driver for silver. It enables both a monetary metal and an essential industrial commodity. This industrial demand creates a solid floor for the price, something that gold doesn't have in the same way. So why did I say don't buy gold today? It's not because I'm bearish on gold long term. Far from it. I believe we are in a long-term bull market for precious metals. But tactically, right now, the smart money might be looking at silver. The potential for explosive upside in silver is, in my opinion, much greater than gold in the short to medium term. When the Fed does finally pivot, and they will have to eventually, silver is going to fly. A reversion in that gold to silver ratio from 90 back down to its historical average of around 60 or even 50 would mean a massive outperformance for silver. And let's look at the charts. For gold, the key level to watch is that $2,000 psychological support. If it holds, great. But if it breaks, we could see a further slide. We're in a bit of a no man's land. That's why I'm urging caution for today, February 7th. We're waiting for more clarity. We have more Fed speakers this week, and their words will be dissected for any hint of a change in tone. The market is on a knife's edge, now for silver. The chart is telling a story of consolidation and base building. It's been coiling like a spring, trading in a tightening range. The longer a market consolidates, the more powerful the eventual breakout. We're holding strong above the $22 mark. If we can get a sustained break above $23.50, and then the crucial $24.50 resistance, the path to $26 and beyond opens up very quickly. This is the setup I'm watching like a hawk. The risk-to-reward ratio for silver right here, right now, looks incredibly attractive. So what's the secret for February 7th? It's not about some grand conspiracy. It's about reading between the lines. It's about understanding that the market is forward-looking. It's about recognizing the immense, underappreciated potential of silver. While everyone is fixated on gold and the Fed's every word, the real opportunity might be quietly building in the silver market. The combination of record industrial demand, its monetary safe haven status, and its current undervaluation relative to gold creates a perfect storm. So my strategy is this: be patient with gold. Let the dust settle, Let's see if it can firmly reclaim those higher levels. But be very, very attentive to silver. Any sign of a breakout could be the start of a major run. It's the asymmetric bet. The downside is relatively limited by strong fundamentals, while the upside is enormous. Think about the bigger forces at play. Governments around the world are drowning in debt. Central banks are buying gold at a record pace. They know something is coming. They are preparing for a system where the dollar's dominance is less certain. In that world, real, tangible assets like gold and silver will be king. This isn't just about a short-term trade. It's about protecting your wealth over the long haul. So, to recap, the Fed's hawkish stance is a short-term headwind, but the bigger macro trends, debt, geopolitical risk, and de-dollarization, are massive tailwinds for precious metals. Gold is in a holding pattern, and it's wise to be cautious until we see a clear direction. But silver is the coiled spring. It's undervalued, it has monster industrial demand, and the charts are screaming potential. That is the secret the market is trying to tell us on this February 7th. Don't just follow the headlines, look at the fundamentals, look at the historical ratios, and look at the charts. The opportunity is right there for those willing to see it. Thanks so much for tuning in. This stuff is my passion, and I love sharing my insights with you. If you found this helpful, do me a huge favor and hit that like button and subscribe to the channel. It really helps us get this information out to more people. And let me know your thoughts in the comments below. Are you bullish on gold, silver, or both? I read every single comment. Stay safe, stay smart, and I'll see you in the next video.